The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the February 19th. Fantastic Friday edition of today's Trader's Edge. I'm your Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us today. You and I, we get to go look at the circumstances of the bulls and the bears, the buyers and the sellers. We get to go figure out what it is that they're communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in at 877-927-6648. Of course, internationally, you can reach us at 727-445-1044 on this fabulous Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we have the Dow. She's trading down 52 points at 16,360. S&P's off about 3 points at 1915. NASDAQ Composite up 15 points at 4503. Russell 2000 up 4 points at 1,009. The DAX closed the session off 75 bucks, closing out at 93.88. The FTSE was down 22 points at 59.50. Gold is up $5, trading at 12.31. Light sweet crude back $1.25, trading at 29.52. To the upside out here, leading the charge dollar-wise, individual equity-wise, that is Priceline up another 16 bucks today, 1 3/10%. Equinix up 11 bucks, that's nearly 4%. You've got Arista Networks up 11.5%. Up $6.60. Public storage up about the same, $6.70, about 3%. Valiant Pharmaceuticals, VRX, I think we took a look at that yesterday and said, hey, I don't see a lot in it. It's down 7.5% off $7 right now. Boston Beer, Sam Adams, down about $6, a little over $6. Alta Salon down $5 out there. But let's go ahead and get this show started out here. Let's go figure out what these markets are communicating to you and I. Let's start with the Dow. Now, in the case of the Dow, it's trading off 58 points as we speak right now. Here's what we know about the Dow. We're going to go ahead and put up, we've got a couple things that popped up on the screen. We're going to eliminate one of those. We're going to eliminate these market profiles out here. Okay, now we take a look at the Dow. Well, there's a lot we can glean from this chart, is there not? The first thing that you and I, we got to get rid of that volume out there. That doesn't make sense. Okay, so here's what we know about the Dow. If we just simply take a look at where the market really began moving to the downside, December 29th, December 30th, and we're just simply going to go ahead and draw a trend line. That trend line off of the high of December 30th, we're also using as a touch point the high of February 4th. We can see that the Dow broke through that trend line on February 16th, so it did it this week, and had nice follow through on the 17th. What we got right now is a little bit of a pullback. We can see the resistance level. I mean, it's about as clear as you can get. So let's take this and put a horizontal line across our screen out here. And we can see that really at about this price level right here, right around 16.5 and a quarter or so. The actual high from the trading session, that little doji style candle on February 1st, that's 16.510. So around 16.510, 16.520, somewhere right in there. That is resistance. That in essence where price stopped yesterday. Now, what does that mean to us? Well, it could mean that we've got just simply, let me get rid of that yellow line under. We could simply have a retracement. You know, one of the tools that we might normally use or we would use for sure, is just coming from the recent swing point low. It's on February 11th, all the way to the high up here on February 18th. And a natural retracement would be what? Exactly, 61.8%. That would say that the Dow could pull back to 15,888. If it did that, it would come right back and test the trend line that it broke out of. So that's a possibility. But first, it has to at least make a 0.382 retracement, and it has not done that. The 0.382 retracement is 16,126. So if you and I just use this as our only tool, and we call Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hey, welcome back, folks. Sorry about that. I think just as I was saying, we use some special tools Apparently, this was an NSA project, or maybe Apple heard me, maybe it was Tim Cook, he heard me say special tools, and he thought I was going to give away the secret sauce, and they just simply went ahead and disconnected my internet connection. I still have no internet connection, so I'm going to do my best at the moment to really try to walk you through what I think the market is communicating to us, but not having current data and updated charts, in this market, anything can change in a moment. So we were taking a look at the Dow. And in the Dow, we were noticing just simply from the low of last Thursday up to the high of yesterday, the market has not even made, on its daily chart, has not even made a 0.382 retracement. And one of those special tools that you and I use, we go take a look at what's going on the intraday time frame basis. And you may remember yesterday, my clients and I, we exited our long trade inside of the NASDAQ as a result of a couple different patterns. One of those patterns was that inside the 120-minute time frame chart, price was moving higher. This is the Dow futures, by the way. Price was moving higher, doing with less relative strength out there. We got the nice little reversal signal we were looking for, and we exited our trade shortly past 10 o'clock in the morning. That proved to be the right strategy to go ahead and protect those profits. Now, what's also taken place is, and you can't see it on my screen, but if you do track the futures contracts, you don't have to trade the futures contracts, but you really should gain access to them so that you can go ahead and utilize these same patterns that I share with you each day out there, because they are providing way better signals than utilizing, for example, the ETF structures and so forth. Now, if you had access to the Dow futures, one of the things that you would do, in fact, each of the futures contracts, you could put them on a 30-minute time frame chart. And I wish I was connected to the internet and I would show you this, but you can see those if you want to go subscribe to Mastering Probabilities and check that out for the next 30 days. And there's absolutely no reason why you wouldn't want to do that. But what you would find by going to the 30-minute time frame chart for the Dow futures is that, let me see what time frame. It was at exactly 10:30 this morning. So at 10:30 this morning, what the Dow futures did on their 30-minute time frame was they completed an A to B equals CD pattern. Now, at the same time that they were doing that, if you were looking at that candle at 10:30, you would see that was a bullish engulfing session. The body of the candle is truly the essence of price. So we complete an A to B equals CD. You get a nice bullish reversal signal there. The very next candle, the market didn't do anything. It was virtually a doji. But what that tells us is that we have a confirmed, what I like to say, buy the D point in there. That says, now what also was taking place on that 30-minute chart, at the exact price, the exact low of 16,245 on the Dow futures, what you would see is that's one of our seventh-inning stretch candles out there. Now, that's a beauty, because if this is, which has been an extraordinarily good run off of, we'll call it really Friday's low, but Thursday was the low out there. But from Friday through yesterday morning at 10 o'clock, huge run, nice run. Wide price spread if we take a look at the weekly chart. Huge breadth when we take a look at the New York Stock Exchange. In fact, from last Thursday through yesterday, the market went from oversold to extremely overbought conditions out here. So yesterday, a day of rest. Today, a bit of a pullback in the morning. That would be normal. But the cool thing is that if this truly is a big run to the upside, the low that took place between 10 and 10:30 this morning inside the Dow futures, 16,245, we should not even see that pierce. Now, here's the issue. What the bulls need to do, if they truly are going to go ahead and take back control of the market, and there's not been much of a decline, we have to admit that, but what they need to do in order to prove itself to you and I is they have got to get above 16,352. Now, that's in the futures contract. That's in the Dow futures. That's what you want to be looking at. If you and I switched over, I'm going to switch over here, even though I have a static chart at this stage. If you and I switched over and you say, hey, I don't have the Dow futures, but I've got the NASDAQ futures out here, well, then what I would tell you is the NASDAQ futures completed, they came close to completing a 1-to-1 A to B equals CD to the downside. Its price projection would have been 41.1750. What it actually did at that same time, actually at 9:30, it was at 10:30, at 10 o'clock. At 10 o'clock, so the NASDAQ is stronger than the Dow, at least it is at the moment. And it made a low of 41.20 and a quarter. Now, when it was doing that, the prior candle, the 10 o'clock, 9:30, the 9:30 session out here, nice little hammer candle. So as the as the market was opening inside the futures contract, nice little hammer candle that was tested on the very next session. That was rejected. And in the case of the Nasdaq, it was able to clear that number that I gave you, that the Dow futures needed to clear. That was its current 30-minute TAS market profile resistance level. Now, the beauty is that the Nasdaq actually cleared that level. It cleared the first hurdle. Its next hurdle that it needs to clear for us is 4169.53. As long as it can close above that level, then that tells you that the bulls have regained control of the market. Now, we don't have a seventh wave inside the NQ. We only have wave number 6. As it was moving down there, and it was the Dow that gave us the biggest signal yesterday. It may be the Dow that is giving us the biggest signal today. Either way, whichever way the market goes, that's what we want to watch for the low. We want to watch for that resistance level to see if it can be taken out. Now, if the resistance level isn't taken out today, that doesn't mean, as long as that low doesn't get taken out, you've got to give the benefit. I think you have to give the benefit of the doubt. I know you have to give the benefit of the doubt to the bulls out here. Now, in the case of the S&P futures contract on its 30-minute time frame, it too made a 1-to-1 A to B equals CD to the downside. And at that 10:30 session out here, gave you a key reversal session. So at 10:30, you had a bullish engulfing, you had a key reversal. And I can't really use the low of that session to say, if you get one tick below it, that the pattern has failed. That would not be the case. But what the ES Mini needs to do, the number you want to write down on your pad of paper out there is 1912.50. If at the end of the day, the ES Mini has closed above 1912.50, it'll be giving us a confirmation that it has rejected that lower price and that the markets ought to continue to move higher. Completely different story if, in fact, the low at 10:30 inside the Dow gets taken out and let's say the market finishes towards its session low. Do I expect that to happen? That's not what the message is as you and I began this show today. And the reason that it's not the message is simply because if you took a look at the VIX index, at least at that stage of the game. So I don't know where it's trading at right now, but it was at 2102 when you and before the NSA kicked me off the air out here. But hey, the heck with them. We found a way to go ahead and stay on the air. Now, the key level to be watching, in my opinion, inside the VIX index is going to be 2196. I said as we came on the air, as we got kicked off, was traded at 2102. As long as you're trading below that 2196, what that tells you and I is the VIX index is likely headed to 1858. May head lower, but 1858 becomes its next target. And if that's what the volatility index is doing, this market will find its legs, whether it is today, whether it is Sunday night. And likewise, if in fact we see close above that level, 2196, I'd really call 2207. But if we do see a close above that, then that's a whole different story out there, and that is taking a look. So that's what the markets are doing out here. I would also say before we got kicked off there, we were looking at the Dow, we were looking at the 0.382 retracement, 0.618. What the market would be communicating to you and I is if the level, again, that level inside the Dow futures where it formed that seventh wave, that is at 16,245. If for some reason we see any movement below that level, then that goes ahead and kicks into play probably that 0.382 retracement on the daily, maybe even the 0.618 level. But until that takes place, the presumption of information says the bulls are back in town. And they were only really gone for about 24-hour period because it was 10 o'clock yesterday, 10:30, when they gave us the message that they were ready to lay down and see what the sellers could do. And, hey, in this market here where the sellers have not been at all bashful, they did not do a whole lot of bashing to the downside. Now, the other levels to be watching, in my opinion, today is going to be light sweet crude. And what light sweet crude did during the morning so far, it came back and it tested the bottom of its TAS market profile. That, by the way, I got to go. What is it, by the way? My charts are dead here. It is 2926, I believe, is the number. So 2926 is what it is that you want to be watching. If light sweet crude were to close below 2926 the message is we will probably see these markets head lower as well, because that will be a key level of support that the bulls will have lost. Likewise, should we see the light sweet crude close above 30.09 to be specific, what we're likely to see is a move up to 32.04. Now, 32.04 is a significant resistance area. In fact, yesterday, as the market was making its highs, which was right around 9 o'clock in the morning, light sweet crude got up to a price level of where is it? It got up to a high of 31.98, and the number I was giving you is 32.04. So that's pretty close. On just a few pennies there, that's 6 cents off on the trade. So 32.04. If in fact that number gets cleared, just simply because of the way the market is correlating itself to light sweet crude, the market will definitely be moving higher. So to the bottom, you want to be watching 29.26 as support. You close below that, that presents a problem. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Back, folks. We got the Dow off about 53 points or so. The S&P down about 3, and we're going to go to Paul in California. Paul, thanks for calling. Thanks for holding. How you doing this afternoon?
Hey, I'm doing great. I can't complain. It's Friday. I'm looking forward to a eventful weekend here. So how about yourself, Steve?
Excellent. I'm doing great. I would be doing a heck of a lot better, though, if I had an internet connection and I could see live what the charts are doing. But I think you're calling about the VIX. Is that correct?
Yeah, I jumped on the show a little bit late, so I caught the very tail end when you were speaking about the VIX, and I was just wondering if you could review those key levels to look out for.
Sure. I can. Now tell me, are you in a trade? Are you tell me how you're using the information too, and then I can.
Well, I'm actually shorting the UVXY right now, and
in the UVXY, is that the long position for the VIX?
No, it's shorting the VIX.
You're shorting the VIX. Okay, yeah. Okay. So you're shorting the VIX. The level, and have you been in that trade for a while, or just today, or?
Just today. It spiked up, it went short at the open, and it's been doing pretty good. So I'm trying to look for these key levels on the VIX to look for an exit point or to stay in the trade, you know?
Sure. Okay. So I'm glad that I asked. So with the information I'm going to give you, first I'll review what I was sharing with everybody during, as we were coming into that last break. But for you, and this is really going to be more vital, and this is where I really wish I had live data, the UVXY is traded. What's inside that is the two current futures contracts, and it's weighted like about 60-40, 60-30, and then 10% is cash. I believe that they typically keep inside of that index, and so looking at that is going to be different than taking a look at the cash VIX index. Just so you know, so the underlying basket that you're actually trading there is the futures contract. I believe right now, I can't look it up, but it should still be, it's probably March and April. It could be February and March. Or March and April. So you want to take a look at that. And you really would be looking at the patterns that are associated with those two contracts, especially one that has the largest weighting inside it. But the numbers that I gave earlier in the show, and this is more pertaining to what the stock market is likely to do versus the futures contract, is that if, in fact, the VIX can close under 2207, 2196. Those are the two numbers to be looking at. 2196 preferably. And when I was dropped off of my internet connection, it was trading at 2102. If today we see a close below that 2196 level, it doesn't guarantee, but the pattern says that the VIX itself, the cash VIX index, will go ahead and trade down to 1858. And if the VIX index trades down to 1858, the stock market, the S&P 500 specifically, will do only one of two things: trade sideways or move higher out there. My venture would be it'll go ahead and trade higher. And if the S&P takes out the most recent swing point, it could easily be setting up an A to B equals CD to the upside. And I hope that that's what it does, because it would set up a nice Gartley sell from a market standpoint. So that's what I was referring to before we went to the break. Even when I click on everything here to try to get my charts to show the current contracts, I get basically blank information. My screens are kind of frozen out there. So I think that you are in a good trade, but I believe, if I'm not mistaken, I believe the levels that you want to be watching for, do you have access to the futures contracts?
No, but I could track the VIX right now, and that is trading, the current VIX is trading at 2097 at the moment.
Yeah, okay. So that still bodes well. You see, the VIX is trading, as you say, right around the 20 area, so we'll call it 21. The February the February futures contract is trading at 2405, and the March is at 22. Well, it's around 2405, just as the March was around 2245, and the April was around 2290. So the movement that we get inside the cash index may not be the same type of movement. Do you trade the UVXY or SVXY very often? Yeah, I do. So have you seen days where you see movements in the cash VIX index, but you don't see a same correlation inside of either of those two ETNs?
Sometimes.
Yeah, and that's what's happening is because it's really the underlying instrument. What you're really trading is the futures contract. So the numbers I believe that you're looking for on the February and March. I'm not positive it's a February contract that's being traded right now, but it would be 20. You're looking for that to get down to about 22.49, and ideally you would see the March contract for the futures contract for the VIX close below 21.49. That would be the number. And if you do that, that says you're in a really nice trade out there. So I hope that assists you. It's absolutely the best that I can do in flying blind here and not seeing data. But I'm solid on the numbers that I rattled off to you, though.
Awesome, great. I appreciate you trying to help me out, even with very limited information there. And before I go, I just want to let you know I jumped on the webinar the other night, and it was a lot of great information. You actually sent me the PDF of the reversal candlesticks, and that's the bullish and bearish, and I've been using those a lot. It's been helping me a lot in my trading.
Oh, that's great. That's great. Well, that's what we're here for at TFNN, educated investors. So thanks for attending the workshop, and glad to know that you're utilizing that information to assist in your trading, and I look forward to further assisting you.
Awesome, Steve. Have a great weekend, buddy. Talk to you.
All righty. You too. That was Paul in California. And, folks, at this stage here, I've got no internet connection. And I'm giving you the best overview of what the market is doing. I have put additional quarters in the machine, but apparently that was not the issue out here. And I've actually had some internet connections all week long. So that has been a bummer, and a real bummer. And I don't have a solution for it. So, we've got about a minute or so to go to the breakout here, and so I'll have the production room go ahead and play music for you. Maybe we can. I don't know if you have any special requests out there. You can type them inside the Tiger's Den. I will still stay with the station just in case my internet connection comes back up, and then we'll go back to it live. But I've given you what I believe are the parameters to be watching today. Whether you're a bull or a bear, we've got both sides of it covered. And again, those key levels being the low inside the Dow futures contract, low of the day thus far, which is the price area of 16,245. You get below that, and it says that the bulls have lost it at least for the day, and that you could anticipate a lower price. But as Paul and I just covered with the VIX, at this stage here, the VIX index is screaming to you and I that that's not the case. So if I don't get back to you, I hope you have a great weekend. Sorry for this craziness out here. They say life happens for us. At least that's what I say, and I do believe that. Now we got to go figure out what that for us is all about. So have a great weekend, and I look forward to seeing you on Monday, if not in a few minutes. Take care, folks.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back. Question of the den is MNR monthly. That's a Monmouth real estate investment. Is that restart in the monthly leg B? Yes. That's a new leg. It's a gray B because it's underneath the previous high of peak D at 1207. It's acting very, very well. And I've got this from a while back. I must have been looking at it for some reason, but never got into it. All right, we're going to go to Brent in Martinez, California. Brent, how are you?
Good day to you, Basil. How are you?
I'm very well, thank you.
Good. The main purpose of my call today was I had some time. I was reflecting on just the type of trading year it's been so far. It's been really fantastic, and kind of just given some thought to how I got to where I am, and I just wanted to express my gratitude and appreciation to you, and I hope that, Larry's listening, and appreciation to you, and I hope that, Larry's listening, and Steve, and everybody else that, is part of the TFNN team. And
we really appreciate that. That's very kind of you. Thank you.
Oh, yeah, it's just you guys, Tom has assembled just a wonderful team of people, and not only are you guys knowledgeable, but you're very generous with that knowledge, and I think you've, at least I know for me personally, has been a huge help, and I know you guys have, I'm sure, have touched a lot of other people's lives and been, a positive influence on their lives, and I just really appreciate all that you guys do, and I hope you guys, keep doing it and keep providing all that great information that you guys give us every day, and I just know for me it's very much appreciated. And just thank you very much for all you do.
I think the appreciation is reciprocal in the sense that your trades have just gotten better and better and better, and that's an acknowledgement in many ways of not just what you've learned, it's the acumen and the integrity that you've put into your trades and your studying process. I think the congratulations really, Brent, goes to you.
Yeah, we all have to develop our own, I guess, way of trading and the disciplines that we have to put in place. But it sure helps to have you guys out there and to kind of reinforce what we have in our minds and what we try to do every day as traders. And I just do appreciate it. And Larry's been a big influence, and certainly appreciate everything he's done, and that's kind of the foundation of my trading, and I use little, bits from you and Steve, and just it's kind of this conglomeration or a hybrid kind of trading that I do using all the key little elements you guys have provided over the years, and it just is kind of come to fruition into a pretty solid little trading platform that I use, and I really do appreciate everything you guys have done. So
that's fantastic. You made my weekend, and I'm sure that all the TFNN hosts appreciate it just as much. That's fabulous.
I was going to let you know, I did sell some of my. I talked to you probably about. It's been several weeks ago now that I had bought that Coeur d'Alene at $1.90, and I did get out of some of that position today because I had 100% gain. And a
double is fantastic. Your money doesn't know where it doubled from; it just knows that it doubled, and that's fantastic.
So that was the main thing. But just you have yourself. I'm
going to just add one thing here to the Coeur d'Alene chart. I've got it in leg. I've got it in leg D. But if I was a little unsure at this particular point about whether or not from the technicals it was about to turn down, I would say, let's just imagine that this was really leg C, right? That somehow or other this was leg C. I would have used that double top at 342 on the 16th and then 342 on the 17th. I would have put it in as changed the color and called it Chapman Wave Phantom Peak because I wanted to be ahead of the game saying, hey, the chart pattern looks very good, but I'm starting to see some technical signs like the CCI and the on-balance volume and the relative strength starting to diverge a little bit so that it could be pulling back, and I want to be ready. So I'm just like you. I'd be prepared to take something off right now, and maybe not the whole thing. It depends on where you got in. But because there's a chance, especially having just broken above the 200-period moving average of 341, there's a chance that Coeur d'Alene CDE trading at 365 down 10 cents could be pulling back. So I just wanted to say that's one of the techniques that I use, not all the time, but where I think it's appropriate to be I like to be ahead of the game rather than behind. Let's just say that really was like a peak C. It didn't make it only because it's trading at such a low price of $3.42. And then it pulled back very sharply. Here I am waiting for D. I like in this case, especially with a chance of a doji candle here, to be a little bit prepared. So I think it's ideal that you take it off. And I'm also going to say to you that how gold and the gold stocks act next week is probably going to be one of the most significant things we've seen in all of the 2 months of 1.5 months of 2016's trading, because how the pullback occurs is going to be really important in terms of assessing whether it's a single leg up in many of the charts in the weeklies, meaning it gives back almost all the gains, or whether it holds maybe 1/3 to 2/5 of the way down, forms a base, and then starts a brand new move to the upside. So it's really important. So I congratulate you on taking profits and also at the same time getting in so perfectly. Nice job, Brent, and thanks so much for the compliment.
You're very welcome, Basil. Have a wonderful weekend, and look forward to hearing you next week.
Thank you very much. You too, and look forward to that. Thank you very much.
All right, take care.
Take care. So, folks, let's just go back. So the answer was, the reason why I brought up the UDW is, you see what's happened here? It's trading at 53.17. So if I got out, I would have said, well, where would I get back in? Well, it would have been let's just say I couldn't have got back in because I was out and it didn't go low enough to get back in. Let's just say. So now it's at 53.17. And I'm kind of stuck, and I'm looking for higher prices. If I was looking for a chance of a big turn down here, I'd be out. I'd just be out. So this is one of the things. So what did I do? I lowered both the stops on both those positions. I lowered them very deeply, but now both of them are really very much in the money. One at 48, it's at 53 and a quarter, and the other one was at 50.37. It's up 2 points. I like that. That's the way I want to do it. Now, in other things, I put in different kinds of stops. For instance, let me use this one here. Telephone. We have telephone, which is AT&T Inc. Communications, trading at 36.79, and we have a half position left. and we got in at 34.19. We took profits on one part of it. We still have half, and it's a dividend stock. So I want to stay in as long as possible. So I've moved this. I haven't moved the stop very much. Let me just read what I say in my Traders Corner. T half long at 34.19, 35.77 stop, doing well. So 35.77, that's a point lower. I might even drop it a little bit further. I want to be in this. This can just chop around sideways, and it's a dividend stock. So it's the thinking that changes. So, Tom, I hope that helps you. And I know that there's no real pattern, but what you will see is that I keep the stops very tight. If we're taking out, look, we had NG, which is Nova Gold. We got in at $3.96. It ran to $4.80. Fantastic gain percentage-wise. And then I put in a stop. I'm actually not too sure why I did it. At $4.16 the next day. I don't think I meant it to be quite as high as that. We got stopped out, just stopped out, and then what did it do? It ran up to $4.94. So sometimes, it just doesn't work out. I'll be back. Basil Chapman, Tiger Technicians Hour. Got another segment to go on also.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. Okay, let me answer some of these questions. So, Adam wants to know about the CRB index. Is this a head and shoulders on the monthly chart? No. Head and shoulders really has to be very clear. You can't, you don't really want to make up something that isn't there. I see no head and shoulders. I do see a major trend line support level that if it doesn't hold in the Reuters equal weight commodity index, is just really problematic. And I'll make it real simple. A close below 3 351.87, the low of January, and it's at 367 right now. So that's 18 points. It sounds like a lot, but the commodities can do that very quickly. If there is a break to the downside in February, that's just really negative. And so far, I must say, it hasn't used this opportunity to move to the upside from the candle of last month. Last month's a little mini Chapman wave Roman candle. It needs to close. I don't care what it is, February or March, whatever it is. It mustn't break the low, and it has to close above 379.31. That's just really important. And then if it can do that, 390s becomes a target. But at this particular point, I just don't see anything yet. I'm still going to say gold is more, the commodity index is equal weighted. I think that gold is having an impact just by saving it from dropping further. And gold is the only commodity that I'd be looking at right now, that I'm looking at. And the question about the USO, you know, USO keeps having these pops to the upside and then fails. USO, for me, I would not think of the USO as being a very positive chart pattern until it's trading in the 10s. But as a short-term trade, yeah, I think that there are enough little pockets of strength for it to bounce at 846. But the risk is that if it takes out 817, 820 something, anything around that 820 area, if it closes under it, it could just fail again. There's something going on. It's not my preference. I've avoided now the USO for quite some time. I just don't like what it's doing. It had an opportunity to have a big move on the upside. It fell from 792. It went to 988. That's a 2-point rally. That's a big percent. 15% is 12%. That's big. And then it gave it all back. It's just not my favorite medium. So I'm answering the question, is USO a buy here? Oh, if you want it as a quick trade, I wouldn't even hold it overnight. Let's look at it again next week, Monday or Tuesday. Next question was, can you look at Baba? Okay, let's do that real quickly, a little more practical here. Baba is Alibaba, and it's trading at 67.20. It's got this arch formation in the weekly. It's retested kind of successfully so far in the monthly. Okay, I'm going to make this is just a trade. If you want to go into Baba trading at 67.17, I buy it right now at 67.18. I would put in a small position so that I can have a 2-point stop. It's a little bit wider than I normally would like, but if at any point between Monday and Tuesday, if it takes out 68.50, raise your stop to about 60, 65, 66. So it's about a point and a quarter stop. And if you want to add on that break to the upside by 1 penny, you can add another small position. If you add the other position, keep your stop on the very initial small position at around about 65.50, 65 to 65.50. Okay, I hope that's clear. What am I looking for? I'm looking for, if it breaks above 68.50, it really has a chance to go into this ugly candle of the 28th of January, which has a high of 73. I'm not even looking at 73. Do one thing at a time. 68.90 to 69.50 would be my first target on the upside. All right? Hope that helps you. And I had a question about gold to IAG. All right, you know what? We'll have to answer that on Monday because we're about to wrap up. You're about to go for your swimming lesson, folks. Get your paddles out. Swimming lesson coming up. Great shows all the way through the rest of the day. You heard what Brent said. He's been helped by all the hosts at TFNN. Make sure you too are helped and have a wonderful weekend. Check out my opening call. Really critical time frame. I think you're going to really enjoy it. Go to the front page of TFNN. Check it out. Thanks for being here and have a wonderful weekend.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.